Hello there, folks. This is Jay Frost, and I can say to all my fellow U.S. residents and citizens, happy 4th of July. We'll say that in advance if you've chosen to spend part of your day with us. We appreciate that very much. I know that you're going to benefit from everything you hear today, but I know it's also right before the time when a lot of people, at a minimum, pull out the barbecue. So thank you for choosing to spend a little bit of that time with us today. This, of course, is How to Raise, the show where we explore the ideas, strategies, and tools to help you advance your mission and raise more money. And of course, it's also a place where you gather up those CFRE credits. So if you're looking to do that, make sure you note this one down. We have a lot of sessions that are available for you all over at the site of our sponsor, DonorSearch. We won't be talking much about DonorSearch today unless our presenter chooses to mention them for some reason, but that's not through any lack of affection. If it were not for DonorSearch, we couldn't bring this to you or the other 700 plus sessions we've done since 2016. And you can find many, at least over the last 2 years, available for you at their site at donorsearch.net under the resources tab, where they're all lined up for you in our 3 different shows, including this one, How to Raise. So if you're looking for CFRE credits, that's one place to go to gather them. And if you're also interested just in this topic of figuring out whether or not your donors can help you, if they're in a position to, and if they have a heart for your work, you can learn a lot about your donors through DonorSearch as well. But again, you can learn all that there at donorsearch.net. Today, of course, we're focusing on a topic that may not always take center stage, but is absolutely essential to fundraising success: clean data, smart systems, and strong compliance. And the session title, as you probably know already, is The Ripple Effect: How Clean Data and Compliance Can Drive Revenue. But before we dive in, and before I introduce our guest and our friend, today I want to give you a few quick housekeeping notes. First of all, chat and Q&A. That is a space both for you and for us. And we would love you to warm that space up for us right now. And I can see a couple of you are already doing that, so thank you. Our presenter already started doing that, so my gratitude to her as well. But in addition to Shelley Watts, who I'll be introducing to you in a second, Jennifer, thank you for saying hello, and Emily and Kathleen, please, for those of you who are with us live today, join that space. Let us know which part of the country or the world that you're from, maybe which organization you're with, what you do. Any of those things are helpful context for our presenter, but also for all of you, because while we will be monitoring the chat, it's also a way for you to get to know one another, which is one of the great advantages, not only of the field as a whole, but these sessions in the Philanthropy Mastermind series specifically. So hi there, Joe. It's nice to see you. So anyway, please do use the chat throughout. We'd love that. And in addition, we have the Q&A. That's a great place to list your questions, especially if you don't necessarily want them attributed, but it's also a way to make sure we don't miss them as they come through. So please do keep that open and available to you. Materials. A recording of today's presentation will be emailed to you if you're attending live after the event. So look for an email coming to you, a note with a link to this session. And there won't be any slides because today our presenter is not using those, but rather just having a conversation with you, which is why I was putting so much emphasis on the chat and the Q&A. But you will see that link come through your email. And if you don't see it in the next 48 hours or so, make sure to check your spam folder, and you can always reach out to me. My email address through DonorSearch is that's Jay, at donorsearch.net. Now, last item, which is that at the very end today, whether you leave 5 minutes in, and I hope you don't, or whether you leave after we've all left, which sometimes happens, make sure you fill out that little survey. It'll take you no more than 30 seconds, and it's vital to making sure that we provide the kinds of content that you want to see and hear in the weeks and months ahead. We are slated to do over 140 sessions this year. The only way we get to do that is by knowing what you want and what you need. So please do take us just a second, fill out that survey, not to only let us know about how you like today, but what you want to see in the future. Now, I'm delighted to introduce today's guest, a friend to the field, also a friend personally, who I've known for quite a while now, Shelley Watts, who is a CFRE in this, and also a CFRE International Ambassador. And she brings a rare and powerful perspective as both a seasoned major gifts fundraiser, something we were talking about just a few minutes before we went live, and a true expert in CRM systems. A self-described data nerd, Shelley excels at diving deep into fundraising analytics, among other things, uncovering insights and transforming numbers into meaningful strategy, something she's done over her career. She may dabble into that or not. She's a systems level thinker who loves connecting the dots between people, data, and tech, and inspiring teams to see how every data point can fuel a stronger, more sustainable fundraising program. So with that, I want to introduce to you Shelley Watts. Shelley, thank you so much for being here today.
Thanks, Jay. It's always a pleasure, and I'm so thankful for everyone that's on the call. I am going to try to make this as engaging as possible, and so I have talked to Jay in advance to say, please, if there's any questions, any confusion, I need a little bit more clarity on that, or I want an example, please feel free to put it in the chat, and I have given him full permission to stop me at any point. I'm not one of those presenters that loses track when I'm interrupted. I love the engagement. So please, please, please just chime in. And I'm going to give a lot of examples. We're going to go through some case studies. And so hopefully this will be as helpful as possible. It's really challenging to kind of cover data and compliance in one session. And so I picked out specific examples, and some of them are going to be really helpful to frontline fundraisers, major gift officers. Some of them are going to be very helpful to database administrators, and kind of all in between. And we'll just be connecting the dots along the way. And so some of these examples seem simple, and simplicity sometimes is just beautiful because it will really help you understand kind of how the full cycle of fundraising looks and can be helped with clean data. All right, let's go ahead and and you can continue to put in the chat box kind of where you're from, what role you're playing in the organization. I see we have database administrators, and we have people who are from community foundations and other nonprofits, but just feel free to keep chatting away. All right. So just a little bit about me before we get started, so you understand kind of where some of this teaching is coming from. I have dedicated the last decade of my life to helping people, sometimes animals, as a major guest fundraiser. But along the way, I accidentally became a data and compliance nerd. And sometimes you're just like, okay, those are very different things, right? Data, compliance, major gifts fundraiser, very, very different. But I knew that if I wanted to be the very best fundraiser possible, I needed to understand the entire process of fundraising, including database and gift administration. I'm not one of those people that can just do my fundraising job without really knowing the minutia and the nitty gritty. And as I worked with a lot of different nonprofits, fundraised for a lot of different nonprofits, I started looking at the data. I was curious, but I also could not help but notice that the data was telling a story that sometimes would go ignored by nonprofits. And I started realizing patterns and seeing how the health of an organization could be measured by data hygiene and even donation processing standards. And it's a kind of a neat trick, but I can actually accurately predict how successful frontline fundraisers will be simply by looking at things like an online donation form interface, CRMs, and even reviewing database entry manuals. I know that seems, how do you connect the dots? But I'll show you and I'll explain. So even though my primary role has always been as a major gifts fundraiser, securing 5 to 7 figure gifts, data really remains my passion. And you'll understand why as I go through these case studies. And so I know as a frontline fundraiser how data impacts the work of fundraisers. And I will give a lot of examples that we'll discuss, and I would love just feedback and chiming in so that this can be as an engaging conversation as possible. I know it's hard to talk about data and compliance. Usually it's a little bit of a dry topic. So my goal is to bring a little bit of life, a little bit of excitement, and to help organizations just across the country. And I know that there's some that are international as well. So as a development professional, right? We are all development professionals in some way or another. We are all on the same team. But there may be some things that a database team might not consider that's important, and it greatly impacts frontline fundraisers. And there may be things that frontline fundraisers may not be thinking about when it comes to caring for donors with proper data hygiene. So I believe it's crucial for gift administrators and executive staff, even board members, to see the meaningful purpose of a CRM beyond a mere data warehouse. I hear that a lot. Okay, what is the purpose of a CRM? And I think that there are people and nonprofits that don't think about that a lot. Okay, yeah, it stores our data, but what else is it? There's so many things that it can help a nonprofit do. And so I've been there. I've been there alongside some of you who have logged countless hours writing, rewriting database procedure manuals. Seems really boring, really tedious, but it's also really, really important. And so my goal is always to try to train people around the purpose of clean CRM data. And there's the purpose of CRMs. I'm going to list kind of my top purposes of a CRM. It's not all inclusive, but it kind of shares with you the things we're going to be talking about today. And we'll cover most of these, but only a couple in depth. So, all right, first, a CRM is what is the purpose, right? What can just put it out in the chats, and then I'll kind of go through my list. What is the purpose of a CRM? Sometimes we expect our CRM to do too much, things that it's not meant to do. And then there's also things that we are not thinking about when it comes to a CRM and our data. So what is the purpose of a CRM? I'll wait till, okay, stores data. Jennifer says stores data and provides insight to how a donor interacts with an org. Great. Joe says to track the relationship development with prospects and gift officers. Okay. Michelle says system of record showing full view of a donor's engagement with an org. Yep. Stores data. I see contacting prospects for donations, reporting data. Yes, all great things. So whenever I'm teaching about CRMs and data, these are the 5 main things that I'm thinking about, from donor entry to any just donation processing, anything that I'm putting into a CRM. The result are 5 things. So one, timely tax receipts correctly based on hard and soft credits. We're going to cover that a little bit later, because some of you with really big orgs you have someone to do that, great. But you may at some point be a CEO or a chief development officer, and maybe you are going to have to manage this process. And so don't completely tune me out if it doesn't really make sense for your role right now. But this webinar will hopefully get you a big general understanding of CRM data compliance, because this may be your role in the future. So just give that caveat, because there's so many times I've started working for a nonprofit thinking there's someone else is doing that. Someone else is entering donations. Someone else is managing the database. Someone else is blah, 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 blah. And there's so many times I've been pulled into projects or things where I'm either giving counsel or directly trying to fix things with a nonprofit, whether it's a huge nonprofit or a tiny nonprofit. So timely tax receipts based on hard and soft credits. Number 2, all right, consistent year-over-year reporting. Really important. 3, proper donor recognition, including giving levels, societies, successful major gifts fundraising, and clean financial audits. A lot of us forget that last one. You may not be in a role where you are talking with auditors on a yearly basis, or they're coming to you to check on, they'll pull donations and they'll say, hey, I want to see the audit trail for this donation, or was there a restriction to this gift? And so your CFO, your finance people, your auditors will love you if you are very careful about your data entry and your CRM data. Okay, so I have volunteered and provided a lot of pro bono hours to teach nonprofits to understand not only IRS rules, fundraising regulations, compliance standards, data management principles, and how each area supports donor-centric fundraising and builds public trust. So all of this is connected. It may just seem like blah, blah, blah rules. Not really fun. Who really cares? But there's so many nuances to this type of information, and I'm happy to provide just if I don't get to all the questions, I will make sure to leave my contact information. If you ever have questions or need guidance, I'm happy to help. I just love supporting the nonprofit sector. So, but important disclaimer before we get started. I am not attempting to provide any tax, legal, or accounting advice. This webinar is for informational purposes only. It's not intended to provide or should not be relied on for tax, legal, or accounting advice. So you should always consult your own tax, legal, and accounting advisors before engaging in any transaction. So that is my disclaimer. All right, again, it took me quite a long time to figure out how to teach this webinar without everyone falling asleep when I titled it Data and Compliance. So we're going to be going through a couple case studies, and I'll be sharing a lot of these are honestly real life stories that I've encountered, and some of the most common compliance and data mishaps that I have faced. And so these are, don't feel bad if one of these, this is what your nonprofit is going through, because I have seen it all. And there's a lot of nonprofits are going through the same thing. Okay, so this one's going to seem really simple, but this is case study number 1. And I titled it the missing phone number. Okay.
And Shelley, as you begin,
yes.
We already had 2 people just making sure that their notes are right for what are number 4 and number 5 on that list again.
Yes, I can go back to that. All right, so I'm not a presentation slides person. I've done so many presentations in my lifetime, so I kind of boycott them, but I'll go through the 5 again. So number 1 is timely tax receipts based on hard and soft credits. We'll go into that a little bit later. Number 2 is consistent year-over-year reporting. Number 3, proper donor recognition. This is including giving societies and levels. And then number 4 is successful major gift fundraising. I mean, it's successful fundraising in general, but we're going to specifically talk about major gift fundraising. And then 5 is clean financial audits. Okay. I accept flowers for any CFOs or any auditors out there, because this is a big one, and this is one that people really just don't think about, because unless you're in the finance team or you're working with the auditors, it's kind of like, oh, okay, but it's so important because it really builds public trust when you have a clean audit, or if you're not losing your nonprofit status. Those small little things. Okay. All right, so going back to the first case study, the missing phone number. Okay, case study. Jay Frost makes a donation online to your charity because he sees or hears something inspirational from your nonprofit, and your mission matches his philanthropic interests and values. So he goes to your website, fills out all the donation information, the donation is made. And he receives a standard tax receipt and maybe even receives a lovely email or handwritten note thanking him for the donation. And you're thinking, that all sounds great. That's probably your nonprofit. That sounds perfectly normal. Caveat, there is no space on the online form for a phone number. So no one gives him a call to thank him for a gift. And people are thinking, okay, why is that a big deal? And I'm going to kind of fast forward things to the perspective of a major gifts officer. And so for those who may or may not know what a major gifts officer does, that's something I've been doing for a very long time. And it's basically asking donors for a major gift. And this is most often done in person. And I make very, 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 very few exceptions when it comes to soliciting major gifts. That I always do them in person. And I have another webinar from DonorSearch that talks specifically about how to joyfully solicit major gifts. And so feel free to go back to that, because we're not going to discuss it too in depth. But The only exceptions when it comes to making in-person solicitations is if they're international and it's not reasonable for me to travel to them to make that in-person solicitation. So I will make a solicitation over Zoom. If there's any health risks or concerns that they can't meet in person, those are really the only exceptions. Okay, so this is something I actually come across very, very, very frequently, is something as simple as a phone number. When you make a donation online, right, there's so many different things that you have to fill out: name, donation amount, email, address, and it's not a big deal if you don't get some of these or phone number, right? But I'm going to kind of walk through the process of major gifts very, very quickly. This is a very generalized example, but it'll help to make the point. Let's say Jay is a donor capable of making a major gift. You did the bare minimum. He receives his tax receipt automatically, or if it was an online gift, within 48 hours. And let's say Jay is a donor that's in your portfolio and you're the major gift officer. You go to give the donor a call, right, Jay, in this case, and you personally thank him for the gift, but there's no number. And you're like, okay, no big deal. Move it along. You can email him note to thank him, share a story of impact. Jay, how many emails would you say that you get in a given day?
Oh, that is a question for me.
I'm keeping you on your toes, Jay.
Oh my gosh. Easily 130 to 150.
Okay. So he may see it, he may not see your email. If he does see it, he may enjoy it, smile, and go about their day, right? Like he might just be like, okay, that's great. He may make another gift in the future, but it does not help you build a stronger personal relationship with Jay. And here's the other side. So Jay, we're going to do some role playing, and this is a conversation I've had many, many times with donors. And so if I do have Jay's phone number in the system, I give Jay a call and he picks up. And so let's pretend this is a phone conversation. So
All right, I'm ready.
I'll kind of steer you if it goes off the rails. All right. So ring, ring, ring.
Hello.
Is this Jay?
How may I help you?
So usually I don't say the last name, and everyone's going to have a little bit of different preferences. I usually don't say is this Jay Frost, because I'm trying to avoid sounding like a telemarketer, because that's usually what you get. I
Mhm.
say, hi Jay, this is Shelley Watts from the Lightbulb Foundation, big nonprofit. I'm calling to thank you for your generous gift.
Oh, hi, Shelley. Sorry for the tone. I just get a lot of spam calls. It's nice to hear your voice.
Oh, you are most welcome. And he seems warm. There's some where you're just like, you're going to get off the phone right away. Jay seems lovely, and he doesn't seem like he would mind a question. Jay, do you mind if I ask you a quick question?
No, I have a couple minutes. Sure, fire away.
How did you first get connected with the Lightbulb nonprofit?
Wow, I guess it was the first time that one of my light bulbs burned out, and so I needed to find new light bulbs, and I just didn't want to keep going back to Home Depot. So I decided I needed to go to a place that was more aligned with my values. I looked on the web, I saw the organization, and that's when I made my first contribution.
I love it. And so we chat, we have a lovely chat. Uh, Jay, thanks for taking the time to chat. I'll be in your area later this year. Do you mind if I reach out and treat you and Yuko to coffee?
I think we could do that. You just need to give me some advance notice, and I'll check with Yuko and make sure that she has time on her schedule too.
Uh-oh, maybe am I frozen or is
Oh,
Jay frozen?
am I frozen?
Okay, no, we're back. We're back.
Well, that happens too.
That happens too, yes. There's a lot of times, make sure you have good reception for your phone, because that has happened so many times. And it's so disappointing as a major gifts officer. You're just starting to have a great relationship. Like, so this is real life people.
Right. Well, so I guess what I was saying was that yes, yeah, I can check my schedule and I'll have to consult with Yuko, but I think that's something we might be able to do.
Wonderful. Thank you, Jay. And so I hang up with Jay. I put my notes in the system about the phone call. And let's say I meet with Jay and Yuko for coffee. Perhaps we have a couple more meetings. I'm just we have a great conversation. I learn more about their philanthropic interests, and I find the perfect project to ask them to support. And again, this is kind of going into my major gift side, but I asked them for a specific gift for a specific amount in person. Let's just say in this case, Jay, it's 10 times your annual gift normally. It's an in-person solicitation. It goes great. And he says,
What? Okay, so in this role play, do you want me to be an easy an
it's
easy
okay.
yes?
You say yes to the gift
Okay.
eventually.
All right.
Okay.
Okay,
And
yes, we can do that.
yes, yes. And so Jay and Yuka are happy to support. It brings him immense donor joy. I've had so many donors. You don't, it's so funny because you're always thanking donors for gifts and you kind of forget that you are bringing them immense joy. And so I've had so many donors that are just profusely thanking me. Thank you so much for bringing me into this particular project because it's their passion. And they're thanking me and they're so excited that I asked them for gifts. It seems kind of counterintuitive, but that's how it works. And so let's say a couple years later, it makes sense, and we asked Jay to add the light bulb organization to as well. He does, and so it seems like a small example, but this whole thing would have not happened if I just didn't have that one piece of data, his phone number. And so this just one little piece of data can be just a showstopper in meaningfully engaging your donors. And even things like their name is spelled wrong, right? You don't have their gender appropriately. So you may say Mr. or Mrs. or Ms. Or so how many times have Jay, probably not as much, but how many times have people spelled your name wrong?
Not a lot, but you mentioned my wife's name, and
Yeah.
people get her name wrong all the time. And I try to make light of it, even though I think it's annoying and it can bother her. But I'll get pieces of mail that are sent, including from many nonprofits, where she's listed as Yoko or Yuki or things like that. And it's only 4 letters and 2 syllables. So people really should be able to get this right if they have the data right.
Yes, I get annoyed and I work for nonprofits because I have an Asian name too, and a lot of people get it wrong. I've seen so many variations or their email or address that's entered incorrectly, making it really challenging. And so as a major gift donor, and this is going to be a side note, but I'm just going to say it because I'm the presenter. For the love of everything, please do not append donor phone numbers. Like there's services where you can buy donor data like phone numbers and emails. It's paid. It kind of fills in all your data. A lot of times it's incorrect. And there's probably nothing more frustrating for me as an NGO than to sit there and call a dozen numbers that may not be your donors. And I have to work really, really hard to get a phone number if it's not already in the system. And so I can do things like I'll email them or mail them a card to say, I'd love to find time to chat. The number of times I actually get a phone number is very, very, very rare. And so just side note, just make sure that it's accurate and please don't buy the information because I've just seen it go wrong. And then for every single donor that I'm calling, it may be like 12 different numbers and a lot of them can be wrong. So this is a very, very small fix, but it can have profound ramifications for your major gifts program. So something little, very simple from phone number all the way to major gifts and legacy giving. Before I get into case study number 2, any questions or thoughts or anything? Happy to stop and chat.
I just see a laughing face right now, probably in response to all those wrong phone numbers, but no questions yet.
Okay, sounds good. Firsthand experience. Okay, case study number 2. I'm calling it the missing credit. You can see missing is the theme here. So if you have never had to talk to a frustrated or even maybe a yelly donor about an inaccurate tax receipt, are you really a fundraiser? Kidding aside, I just want to go through this case study. And this one, you might want to have a pencil or a pen or phone to write it down because it involves a little bit of math. I try to make the math as easy as possible, but I'm going to go through Jay's fake giving statement for the year, his giving for the year to the Light Bulb Foundation. Okay, so write this down. $10,000 check from his personal account, $10,000 credit card donation for an event with $5,000 worth of goods and services, $10,000 check from his business, and Jay is the owner of this business, $10,000 from a donor advised fund, $10,000 in a stock gift. That's the fair market value, the high-low trading price. It was 10,000, just make it round. And then $10,000 a QCD, a qualified charitable distribution from his IRA account. Okay, does it? Hopefully everyone got that. I tried to go really, really slow. Again, $10,000 check, personal account, $10,000 credit card with $5,000 goods and services because it's an event, $10,000 check from his business. Jay is the business owner, 10,000 from DAF, 10,000 stock gift, $10,000 QCD. So very rarely will a donor give in all these ways, but it will be a combination of some of them. And a lot of times I see 2, 3, it just depends. And so in this case, what is their total giving? And then what is on their tax receipt? And so anyone have a number? I don't see the chat. So Jay, you got anyone? And if I lost anyone, I'll just go through it again.
Don't see any notes yet. And I know there are some people in this crowd who have dealt with this issue. So I won't read names, but if you have numbers, I think that'd be helpful to share. So we have one that says 60K total, 55K tax receipt. Another one says total giving 60K, set tax receipt 45, which is exactly why you're doing this, because it's good for us to discuss this together. Any other numbers? Okay, nothing else right now. But even right there, you see that $10,000 delta.
Yeah,
right?
you got the difference. And so
And one saying 45 or 35. So yes, lots of different numbers.
Yeah, lots of differences. And so again, you have your database administrator entering this information, how your CRM is receiving this information, and then how a major gifts officer is going to look in and filter this information for major gifts purposes. Okay, so the answer is, because there was 6 types of gifts, they're all $10,000. Their total given is $60,000, right? And so that is really important, and we'll kind of go back to that. Their tax receipt is actually $25,000, and I'll go through it again. So hard and soft credits are so important. And again, there's some of you that might live this day to day. You do the database administration, that's what you do. And then you may have people who are just like, I don't really care. It shows up in my CRM. I'm a fundraiser and hopefully it's all entered correctly. But again, the reason why it's really important is there's 2 things, right? Your donor wants a correct tax receipt, and then and then the other one is that your donor wants the proper recognition. And so for some, you all have probably giving level societies, whatever you want to call it, certain perks that come with all these giving levels and societies. I used to work for a healthcare system, so we would have special giving societies, and it came with different events that people were invited to. And so that can be really important. And so we'll go through the numbers. So you've got $10,000 check from personal account. So that is a hard credit. And so what that means, hard credit for tax receipt purposes, is that Jay will get the tax deductibility of this gift as allowed by law. Obviously, it's dependent on his personal tax circumstance, but this is a hard credit that counts towards that tax deductibility purposes. $10,000 credit card event donation, it's still Jay's, right? So you've got $5,000 that goes towards goods and services. He still gets credit for the $10,000. It is a donation, but $5,000 of it will not be tax deductible. So it's a hard credit, but there are tax receipts tax receipt ramifications. $10,000 check donation from a business. This is where it gets really tricky. There's sometimes where you have a business where people are influencing that gift. Let's say it is some business has a community relations person, they're responsible for giving them the gift, giving you a gift. And so they make the decision, but they should not get credit necessarily on a personal level for that gift. The only exception when I see businesses that a individual should get credit is if it's a business owner. Let's say they're the CEO, the owner of the business, and even though they're not going to get tax deductibility credit for this donation, the business will. So that's why the tax receipt is different. The Jay should still get credit for this for the giving level, right? And so the other one is, and so this would be a soft credit, whereas Jay would receive, the business receive the hard credit, and then Jay would receive the soft credit. And so then there's the $10,000 from the DAF. That is always a soft credit, and we'll talk about why. And most of some of you will know, but $10,000, Jay is still getting the credit for his giving level and giving society purposes and donor recognition. But from a tax deductibility standpoint, it's a soft credit, so it should not be part of his tax receipt. Stock gift, however you guys put this on your year-end giving statements, usually you send them a tax receipt, the high and low trading price on the specific date that it's given. But this is technically it still goes towards Jay's giving because it is a gift. And then also with the QCD, which is a soft credit, they're not getting the tax donation for this, but they're still getting the giving level credit. Okay, so the actual answer is $60,000 in total giving, and let's just say for our purposes that he's part of the light bulb society because the giving level is at $50,000, and so even like if you missed one of these, he might not be part of the giving circle and giving level, and Jay might be upset by that because he knows he gave 60,000 and he wants to be part of that giving society. And some people are like, that, why is it a big deal, giving society, blah blah blah. It actually is a really big deal, and their donors care about these type of things, so you should care about these things as being a donor centric organization. And so the tax receipt really is $25,000. Most of the giving that he is giving is soft credits, and so I'll kind of go through that a little bit more. Obviously, the QCD from the IRA, you get a separate donor acknowledgement for that. And then the business donation, it gets a separate tax receipt for that because it's going to the business and not the individual. Okay, again, so most of you have these donor societies and donor recognition levels, and just imagine a donor's disappointment if they didn't make it on the donor wall or they're not invited to that really exclusive donor event. It honestly is a big deal. And so the data matters. And I've seen so many CRMs and data entry processes muck up the donor recognition because it's hard. The soft credits were not identified correctly. And you need to make sure your data gives you the correct numbers for a donor's tax receipt, the year-end tax statement, but also for your donor recognition. And so again, some of you may have people who do this, or maybe you are the person who does this, but some people who have to do this, well, thank you one day for understanding how this all works. And I know this has happened to me many, many, many times. Have you ever called a donor to thank them for an X amount of, $1,000 gift or whatever it was, but in reality, they gave a different number because it was entered incorrectly in the system, or it was a different type of gift that's entered in the system. So it makes the job of major gift officers much harder because instead of starting off with thank you and gratitude, we start rolling into a conversation. We have to start off with an apology and having to promise to get back with them to sort things out instead of just properly expressing our gratitude. So these amounts also in aggregate become really, really important in identifying potential major gift donors too, because when you're looking at the data, it's not just it's not just, okay, hard credit, soft credit, but it's also what is their cumulative giving, including all those things, so that as a major gift officer, I can think, okay, yes, this person should be in my portfolio. I should be qualifying them to see if they are a potential major gift donor. And because there's a lot of times where I will run a donor, this has happened so many times, where I will run a donor's information through a wealth screening platform, and the data tells you that they would never be able to make a major gift, but yet they do. Or you, based on your relationship and based on cues that you're listening for, and you ask for a major gift and they say yes. I've surprised myself a couple of times where I'm like, the data says nothing, but your intuition, your gut, your data from a qualitative standpoint, your relationship with the donor, they can make a major gift. And so accurate hard and soft credits help to paint a holistic picture of a donor's ability, and it allows you to ask based on their capacity. And so sometimes a donor's capacity will really shine more through their giving than their wealth screening, and that's probably not news to anyone, but just as a careful reminder. So again, the types of giving is really important, because when you're a major gift officer, so someone who is not in that role as a major gift officer might think, okay, who cares? They're giving in all these different ways, but it actually gives you really great intel as to what type of donor they are, right? If they're giving through a business, and you can research their business, and you can see that their revenues is $50 million a year, gives you some indication. If they're giving from a donor advised fund, back in the day, there were minimums for donor advised funds. It used to be $25,000 minimum just to open one. So that gives you an indication of capacity. They're a lot more democratized, which is wonderful. So people can utilize them at lower levels. But just even that, someone who they have access wealth, and they haven't decided where they want to give it to, but they have a donor advised fund, and so or things like they give through their brokerage account. Just the fact that they have a brokerage account, that is an indication of wealth, and is helpful for a major gift officer as you're trying to figure out who your donors are, and how to approach them. Okay, I saw Jay kind of go on and off the mic. So question, thoughts?
We did have an insightful comment and a couple of questions. So would you like to take those now, Shelley? Or
Absolutely.
okay. So the comment was that crediting toward giving societies can be an issue if society membership has more than insubstantial benefits. And because of where this is coming from, I know that may be true at that institution, but I've seen it at others. And that's analogous to what you said with the events, where they get, obviously less credit towards their gift. And then the two questions are, first of all, do you recommend giving a year-end summary of a donor's giving, or as they make gifts?
I always say both. And the reason being is, so I get so many calls at year end, because donors aren't always great at keeping all the receipts, right? Some of them are going to be online, some of them are going to be mailed. And remember, your donors are giving to so many different organizations, right? If they're charitable, the chances are they're giving to more than one organization. So they're going to mix and match. And some people hand over all their paperwork to their tax advisor, and that's it. Some people are doing it themselves. And so I know that the IRS minimum is a $250 for a donation tax receipt, but it's a great way to use it to steward lower dollar amounts in gifts, and just showing impact. Your tax receipt doesn't have to be a tax receipt, just a tax receipt. It can also have a story on there that says this is the impact of your gift, right? Some people combine donor acknowledgement with their tax receipt. Some people separate them, but it's always a good idea to give tax receipts for each individual gift, but then also at the end of the year, a combined year-end statement, because donors rely on them for taxes, and it'll reduce a lot of calls that you get, because they'll call you like, hey, I don't remember what I actually gave. Can you send me information? And it's just another way of just strengthening donor trust and helping you build that relationship with your donor.
Right, right. And then we had a question about the QCDs again. So you have to send a hard credit tax receipt to the financial company who cut the check, even though there is no contact name and just a PO box, for example, Fidelity.
Okay, so just I'm gonna clarify because I heard Fidelity and I heard QCD. Okay, so for a donor advised fund, it can come from a Fidelity, a Charles Schwab, it can come from a community foundation, donor advised fund, yes. I just want to make sure you're not mixing up the two. And then the other one is a QCD. It's coming from their IRA, which can also come from a Fidelity and a Schwab. So those are two very different things. A donor advised fund gift, as it's coming in, you should not be giving them a tax receipt because, and we'll go through this in a little bit too. This is actually case study number 3. So hopefully that will clear up information. But for the QCD and the IRA, they're not getting a tax receipt either. You are giving them a donor acknowledgement that says, thank you for your IRA gift that came in, and they're going to give that to their tax advisor to do their taxes because that's a whole different type of donation. So let me see if I talk about donor. Okay, I talked about donor advised funds in a little bit, but hopefully that answers your question. If it did not, please come back to the chat and I will clarify that again. Okay, so case study number 3, incorrect pledges. I love this one. And this is very pertinent to database administrators and it's also very pertinent to major gift officers. So Jay Frost, he makes a binding pledge of $25,000 after you make a very thoughtful solicitation. He sits on the board of a private foundation. Let's say for this example, it's a family foundation called the Frost Family Foundation. It's kind of nice ring to it, right? Frost Family Foundation. And so this means that all the board members are Frost family members. And so he made the $25,000 pledge. This is a binding pledge. And so some of you may or may not deal in binding pledges. Some of you may just, some of you have contracts for pledges, some of you don't. And so this is a binding pledge. He wants to fulfill the $10,000 of the pledge from his family foundation. And then he wants to fulfill the $15,000 from his donor advised fund he opened before he started the private foundation. A lot of times you won't see both. Honestly, this is not a real example. But in this case, he had money left over from a donor advised fund, and then he started a family foundation. So he wants to fulfill the pledge using these two purposes. And so he can't actually do either of those. And so the reason being kind of goes back to kind of the tax receipt and the hard and soft credits. So also the QCD is still a credit for donor giving societies. I know I'm wrapping up just that last question, but it is a soft credit. Okay. And so a gift from a private foundation cannot be applied to a legally binding pledge. A donor advised fund grant cannot be applied to a binding pledge. And this is why. Okay. And so this is where it gets really, really confusing. As a fundraiser, as a database administrator, this is one of the I see happens time and time again. It gets mixed up all the time. And so it's good. And so some of you may, again, be like, I have departments do this. I don't really care. But one day someone's going to hand you a check and be like, what is this for? I have so many times I haven't said, like, what is this for? And sometimes it's really hard to tell. And many nonprofits mix up foundations and donor advised funds. And some nonprofits don't even specify how these gifts come in and will send out incorrect tax receipts as a result. So all private foundations must file a 990 and donor advised funds do not file a 990. So this is kind of the easiest difference when you're looking at a check, right? And so if you can find the 990 on GuideStar, now I think it's called Candid, that it's either a public charity or a private foundation. And so remember, a donor advised fund is kind of like a charity bank account. That's the best way I use to describe it. And sometimes when you see the check, it's not clear because the names are so ambiguous and you have to do a little further research. So using GuideStar through Candide is Candide is the best way to look that up. And so sometimes there's a check that comes in, it says J. Frost Foundation. And you're thinking, great, that makes it easy. It's a private foundation, except it's not. It's actually from a donor advised fund. And because someone who has a donor advised fund can call their fund anything they want. And even though it's not a traditional private foundation, it can still have the foundation title in the name. But there's also checks that come in from a foundation that they don't necessarily, it's not spelled out where it says foundation. And so it's really important to kind of check, and you have to kind of figure out which one is it. And you're thinking, okay, why does this matter? Why does this minutia matter? But it's all about control of the funds. Once a donor gives to a private foundation or donor advised fund, they no longer have control, right? And we'll kind of go into that a little bit. But according to the IRS, when a donor makes a gift to a sponsoring organization, so this is a donor advised fund, think Fidelity, Charles Schwab, Community Foundation, the donor no longer legally controls the funds because they have already received the tax benefit after giving the money to the DAF or the private foundation. So the donor cannot commit the DAF or private foundation funds for a pledge because a person's individual pledge is the donor's personal commitment. It's not the commitment of the community foundation or Fidelity. It's not the commitment of a private foundation. And so that's even if it's a J. Frost family foundation, it's 100% controlled by the family members. The donors or family members in this case have already received the tax benefit when donating to the private foundation. So yes, they can vote and they can make gifts to nonprofits, but cannot fulfill a personal commitment. And a foundation can make a foundation commitment, but not a personal one. You cannot double dip. And so this is really important because just remember what's the purpose of a nonprofit? It's for public benefit. And so when you're, and it's also when you're giving donations, you are exchanging your funds for the tax deductibility of that gift when those funds go to that charity. And so in this case, when you're giving to a DAF, let's say, even if it is Fidelity, even if it's Charles Schwab, even if it's Community Foundation, you are receiving the tax benefit at the time of the donation. And so if you as a nonprofit were to send them a tax receipt and the donor claims the gift again on their taxes because you sent them a tax receipt saying, thank you, and this is tax deductible, they're double dipping. And so that is why it's really important for the gift administrators to be sending the correct tax receipts, because sometimes the person who is doing their taxes, if it's a professional, they will know the difference. Sometimes the donor will not. And so sometimes they will double dip. And so you want to make sure that these amounts are correct. And so, and another thing is you want to make sure you, as a major gift officer, understand where the funds are going to be potentially coming from when you're soliciting a gift. Because again, if you're a nonprofit and you deal in binding pledges and you don't know ahead of time that they're going to make a grant from their DAF, they can't fulfill the pledge in that way. And so that gets tricky. It's not like you're going to break donor trust in that way, but you can avoid that. And so I always ask after making a solicitation, say I ask Jay for a $50,000 gift for the light bulb children's project. I will always say, and he thinks about it, takes a couple of weeks. Him and his wife are thinking about it. I would have solicited both of them in an in-person meeting, just going to emphasize that. And they get back with me and they say, yeah, we're going to make the $50,000 gift. I always ask, how are you going to make this gift? What is your plan on fulfilling this gift? And so if it is a donor advised fund gift that he's making, then I don't I don't have him sign a pledge contract because that he can't fulfill it. So there's other documentation where it will be an intent to give, which is great. And then also if you have, my dog's scratching, so hopefully you see my cutie pies in the background at some point. But also if they are going to give from stocks, or if they're going to give from a private foundation, you just want to know these things kind of going in before, and hopefully you can see their past giving, and it gives you an indication that you need to be. I always ask the question, always, where the gifts are coming from when I'm finding out about their philanthropy. Like, how do you usually like to give? Like, and donors will share a lot of the information, and donors will share down to like how they've made their money, where they put their money in, what stocks they're very if there's a trusted relationship, there's a lot of information they'll share, and it'll guide you as a major gift officer on how to make that ask, so you're not breaking any of the IRS rules. Okay, that was a fun one. Any questions about that? Any comments? Any thoughts? Jay, any thoughts from you?
Well, not for me, but there were a number of comments about all of this stuff along the path, and maybe we can save some of them for the conclusion, because I know you still have a few more things you want to go through.
Yeah, I have one more case study to go through, and it's this is a fun one. I've pretty much every nonprofit that I have encountered or worked for has done this incorrectly. So, yay. So in this case study, I called it the missing disclosures. And it's a real life case study, and I'll show you kind of examples. And I wanted to first ask the question, and I know we're running short on time, I'm just going to kind of go through this. A lot of people will already know this, have thought about, maybe haven't. But the question is, what is a nonprofit? And so according to the IRS, a nonprofit is a Section 501c3 organization that is not organized or operated for the benefit of private interest, and none of its earnings may inure to any private shareholder or individual. Okay, and you're just like, oh, those are a lot of words. I'll go back to that in a second. So just keep that in the back of your mind a little bit. And so, does anyone remember the yogurt lids where 50 cents was supposed to be donated to breast cancer research for each lid returned? Okay, this is something that actually happened. And the Georgia Secretary of State complained that the consumers had not been given the full details of the campaign because the details were actually inside the lid. So people were buying the yogurts without even knowing the full details of the campaign. And inside the lid, it actually stated that the max that the company would donate was $100,000. And so customers, this was popular. And maybe I'm dating myself a little bit, and maybe some people have like, what is this? But customers returned $4.7 million worth of lids. So if it was an unlimited campaign, this yogurt company would have had to donate $4.7 million worth of money to the breast cancer research. And so, do you know how much the company donated, let's say, after the dispute? In total, after they were brought to settle this with the state of Georgia? Does anyone know how much?
No idea. And but you are getting people who are saying, I remember that, and I returned lids too.
Yes. Yes. We all did. It was exciting. We were gonna help fund breast cancer research. And so even though people returned $4.7 million worth of lids, because the max that they were going to give was $100,000, they settled their dispute with Georgia, and they donated an extra $63,000. So in total, $163,000. And so they had to change their disclosure about this campaign, and they created new containers where the disclosures were on the outside of the container, and then they had a minimum of $500,000 in contributions up to a total of $1.5 million. And so I'll give you another example. And we're going to discuss the Yoplait example, or sorry, yogurt company example. This is common news, so it's not like I'll get sued for slander. Okay, but another example is when a military nonprofit teamed up with a jewelry company. I don't. This was probably a smaller one. Probably people haven't heard this as much as the lid example, but the jewelry company sold teddy bears to send. People would buy teddy bears, and their proceeds would be to send care packages to the military. And so the end result for this is the nonprofit entered into a settlement agreement which required the dissolution of the charity. So the charity had to cease existing, pay penalties, and there was an injunction barring its chief executive from serving as a fiduciary or soliciting for any nonprofit. And so it wasn't a small deal. And you're thinking, okay, what does this have anything to do with my nonprofit? So nonprofit organizations, and this is common knowledge, it's not anything you don't know, that it is for public benefit. And charitable solicitations, right, aka fundraising, and this is something you may not know, and charity registration is highly regulated by each state. And so most states, they're the governing body for each state of the nonprofit to protect the general public is the attorney general. Sometimes it's a little bit different. It could be a different entity, but by and large, it's the attorney general. And their job is to protect the general public from abuse of nonprofits. And so if you give a donation to any nonprofit, the donation should be used and marketed for that intended purpose. And so what people may not know is that the attorney generals of each state actually required your nonprofit to be registered in many states before the solicitation of funds. And sometimes it's after you've reached a certain amount from that state. And so again, you're thinking, why does it all matter? Because if you're soliciting funds from residents of that state, you actually have to figure out, like, it's like a giant Jenga puzzle of trying to figure out, well, how much have you solicited? Some of them, it's based on solicitation levels. It could be passive solicitation, meaning you just have your website up and it triggers requirements in that state. Some of them is up to a certain amount of money. Some of them you have to register in each state. Some of them you have to pay annual fees. And so most nonprofits, without even realizing it, have done some sort of cause marketing. And what you probably have not realized is that you have participated in a commercial co-venture. And don't feel bad. Almost all nonprofits have done this. And a lot of them have not followed the rules. But again, this can jeopardize your nonprofit status and can get you in trouble with just your attorney generals, which is not a good idea. And so these are different examples. So example, a restaurant donates $5 per meal to your nonprofit. A t-shirt company donates $5 per t-shirt sold, or any type of revenue sharing agreement between a nonprofit and a for-profit business. So not only is the act of fundraising regulated by each state, I'll give you an example for in Michigan, any charity that solicits, which means active, and or receives, which is passive, any contributions need to register in the state of Michigan. And so there's always exemptions for every single state. So in Michigan, the exemption would be unless your whole staff, everyone who's a fundraiser is unpaid, they're all volunteers, and you receive less than $25,000 a year, then you're exempt from registering. And so these charitable solicitation registrations must be renewed every year. Sometimes it's $0. Michigan, I believe, is zero. It may have changed, but it can also range to $2,000 per year. And so Massachusetts, currently it says on their website, it can be as high as $2,000 a year. And so, but it's only if you have gross support and revenue that's over 100 million. So that's probably not applying to most of you. But again, these are things you have to be thinking about. And this is why data is so important, because you need to be tracking, okay, if you don't have a donor's address, how are you going to know whether you hit these thresholds in different states? And same, I've in the past, I've been a paid fundraising consultant for nonprofits, and I have to be licensed, I need to be bonded, and I need to be registered to be a paid fundraising consultant in Michigan. All different states have very different ideas of what a fundraising consultant is, what the term fundraising consultant they have. And so you just need to check if you're hiring any fundraising consultants, you need to check the rules and regulations for your state. And so going back to the co-venture, when you enter in these commercial co-ventures, so again, any agreement where a for-profit business is going to advertise that so many dollars of something is going to go to your nonprofit when a consumer purchases something. Remember, the reason why these things are so regulated is because there's been abuses, like the teddy bear example, Yoplait yogurt company example. And so these rules are put in place because as a nonprofit, when you're lending your name to things like this, you're not trying to help a private entity like a business raise, or raise the revenue. That's really not the purpose. You're not supposed to do that as a charity. It's a fine line, right? Because in this case, a charity can say, the teddy bear company could have said, okay, first, they didn't have a contract. Okay, so that's number one. They didn't have a contract in the appropriate states that they're in. And so they also did not have a contract where it stated, this is how much money is going to go, this is a time period. So every contract in different states are different as well. So just do your research. But when it comes to these commercial co-ventures, you just have to be really careful because you have to play a passive role. And there is kind of a fine line as to what passive means. So you can say something, even you can't advertise for the company, right? You can't use your charitable dollars to advertise because that can actually trigger UBIT, which is unrelated business income tax. And so what that means is you have to be really careful and thoughtful about your role, lending your name, lending your advertising dollars and like your staff support towards things that are benefiting a company. And so the donations can still count as public support, but as soon as you advertise, and every kind of state has a little bit different interpretation of advertising, so research that, please. You can be hit with some unexpected tax implications. And so that is one of the things I see most often, is that people don't have a contract. They don't have the proper disclaimers on whatever they're selling when they are advertising on, let's say, social media, to say, go to X restaurant or go to X, you're telling your donors or the general public to go or do something and advertising for that company so they can make money, even though it's great. You're getting a certain percentage back or you're getting, a certain dollar amount back. That is still something that is highly regulated and that you have to be very, very, very careful of. Okay, so I kind of spoke very generically about these examples, but charities have lost their nonprofit status. Sometimes it's not even malicious. It's not just I'm using these for purpose that is bad. They just may not have followed the rules. They may have how they asked for the funds, right? So however you marketed for a specific campaign, whether it's a commercial venture or just a regular capital campaign, however you market and how you talk about a gift. So if I ask Jay for a gift for the Light Bulb Children's Project, and I specifically ask, we enter in a binding pledge, and we don't record that in our CRM system, that those are restricted dollars, whether it's a major gift, a gift that is for commercial co-venture, or otherwise, and we spend that on something other than the intended restriction, guess who gets involved? It could be your attorney general. It could be, your auditors are not going to be happy with you. Your CFO is not going to be happy with you. So all these things, from how the gift is solicited into how the donations are entered into the system, will help you really make sure that you're following the rules and you're maintaining that public and donor trust. Okay, so that one's always catches a lot of people off because that's not always well known. All right, so that was my last case study.
Thank you so much, Shelley. And I don't know, as you're thinking about putting all these pieces together, because it's a lot, and there were the comments about this throughout. I think you addressed them all, but they were really interesting because I guess it points to something you pointed out earlier, like there may be differences in state law, and as you just said, be aware of your state law. So we had one person who said, I don't think it was really like that in Minnesota, about the way that organizations could add or not add foundation to the name of the entity. So that may be state specific kind of regulation, and that'll be important. And some of the other things that were mentioned here, I know one is about, I'm trying to remember where that was. It had to do with something that I think Alan said was really interesting about year-end summaries. And this isn't about state specifics, but rather just how we might want to think about doing what you've said all along, Shelley, which is to ensure that we're acknowledging and showing our care for donors by totaling all this giving that they do, not just acknowledging everyone with a little digital receipt, but really acknowledging in a stewardship manner. And then at the end, putting it all together and saying, look what you've accomplished together. Look what we've done together. As was pointed out earlier in the chat, year-end summaries can be tricky with gifts where the donor thinks of having as in just complete a year, but according to IRS standards, they aren't attributable to that year. And I've encountered that myself, where I wonder, well, why wasn't I in this, this particular class of donor? And it may be just because those are the rules we have to follow. So we need to be aware of it, both as you've been saying all along, especially in this last section, so that we're following the rules and doing this properly, but also so we can communicate that to donors with care, so they don't feel like we've been ignoring some of the gifts they've made, that we're just acknowledging them in the ways that we have to by law. So if you were summarizing all this and just saying, what are the couple of things, or maybe two or three things that organizations should do so they can apply these principles you've talked about, these kinds of 5 things that you started with, what would they be?
I would say that I know that this is something that everyone thinks about and thinks that they do well, but just having clean data, making sure that the data is accurate and kind of highlights the 5 things that I talked about, that you're getting accurate tax receipts and acknowledgments, whether it's the hard and soft credits, making sure that all that data, as you go through your audit, if you're going to get flagged for things if you are not thinking about how the data goes in. If your CRM system is appropriately, sometimes the CRM system doesn't even do things like hard and soft credits, or you have to find a workaround for it. And so those things are really important in either choosing a CRM or making sure that just because your CRM doesn't do it, it may not be a system that was really built for nonprofits. And so I've seen this a lot, where a CRM will just not, it just is not thoughtful or mindful of what is needed to do correct tax receipts, to do donor recognition, to make sure that your audit's going to be successful. So kind of just, I know it's hard to wrap everything around, and these were very wide-ranging examples. But as just a fundraiser, making sure that your data is going to work with all of your departments. And I think that that's the biggest thing, is your data, not only the data that you enter in a CRM is not only affecting something like a tax receipt, it's going to affect your major gifts officer. And I've seen that so many times for me, where I'm just like, oh, this job is already hard enough. Can we please have a little bit of clean data in our system? And so, and also at the end of the day, it will impact your donor trust. And so anything that you can do to have these conversations, to have interdepartmental conversations across project management, just make sure that you are all talking so the CRM serves all of your departments well and not just one or another.
It must be really important then to have us all in a policy that's clearly stated that as part of those discussions so that everybody's singing off the same hymnal, so to speak.
Yes, 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 absolutely. And I did see the note about the Minnesota Foundation that you could not add a foundation to the DAF name. I wish that was the case in everywhere else because I have seen so many donor advised fund checks that say the name foundation in the title, and then nonprofits everywhere are baffled and utterly confused. So again, sometimes you just gotta pull back, do some research, make sure that that foundation is indeed a foundation and it's not coming from a DAF because it impacts your data and eventually it'll impact the way you ask for a gift.
Thank you for all this, Shelley. And thank you to everybody who was here and asking great questions and making really terrific comments too. Very, very helpful all the way around. And as Joe was just pointing out in the chat, yes, a recording of this is going to be coming through the form of an email with a link. Please be on the lookout for that to share potentially with people in your office, but also just to kind of think about this again. Does our policy reflect all the things we need to be considering? Is it in accordance with the laws of our state as well as the country? And is it something that everybody can understand and follow together with one mind, which is so important? And Shelley did include her information here in the comments. So for those who might be listening to this later, Shelley, how would you like people to reach out to you?
You can go ahead and reach out to me via my email and personal cell phone number. These are personal, so I'll respond as quickly as I can. And so my email is shelleywatts.iu@gmail.com. And then my personal cell is 586-787-1098. So feel free to reach out with, I love to chat. You can tell that this is fun for me and I love doing it. So I love to chat, brainstorm, give any advice that I can. And so always feel free to reach out.
And as we talked about in the very beginning, names are important. And that's Shelley without an E. That's SHELLYWATTS. Shelley, thank you so much for sharing today. Really do appreciate it. And again, thank you to everybody here. We do have a session coming up next week in this series, but nothing for Frontlines on Tuesday, both in observance of the holiday and et cetera. So we will be back next Thursday with on July 10th with Outside the Metro, Why Rural Donors Matter and How to Reach Them. That's with Eric Heininger, president of Eden Plus Fundraising, who's going to share insights on how to engage rural donors. A very interesting session, very important for those who are trying to figure that out in the past. Plus, don't forget to listen to our episodes of the PM Podcast and Frontlines of Social Good, wherever you like to listen, or maybe just check it all out at the DonorSearch site at donorsearch.net. It's really a terrific place to hear about the personal stories of the lives of people in our field. I'm sure you'll enjoy that. So until next time, thanks, everybody. Thank you, Shelley. Oh, don't forget to fill out those surveys.